Daily volumes of cryptocurrencies still remains very small compared to the overall financial markets. We're talking about the range of 10 billion in crypto per day versus trillions that get traded in fixed income and global equities markets. So it's still very small. So what I like to understand from you guys is a view of the state of the market in terms of institutional capital and how they're thinking about entering the cryptocurrency space. What are some of the things that need to happen, whether it's from a market perspective, a regulatory perspective, or a technology perspective, to get more of the institutional investors in? You're starting to see them getting involved. Fidelity is doing custody, Yale Endowment, but there's different flavors of how people are getting involved in the space. And for the purpose of our session, I think we're primarily interested in the secondary market and trading side of it versus more of the investment, VC type investment side. So we wanted to get a sense from you guys how that side of the market is thinking about things. And once we do have financial markets entering the space, what is, institutional investors entering the space, what does that mean for cryptocurrencies, both good and bad? So to get a little provocative. So I'll start with you, Ray.
Okay, well, thank you very much. I'm delighted to be here. I guess I have to follow up on the Premier's kind of comments and talk a little bit about Bermuda, because I think it's really important. As all of you look to Bermuda as a potential home or a home for your businesses, as a stock exchange, I find we're always kind of at the epicenter, and I think stock exchanges are at the epicenter of developments in their domestic economies or in the global economy. And here it's been really interesting because one of the things I hope the Premier conveyed to you was the innovative spirit that exists in Bermuda, and the entrepreneurialism. And someone last week, and I don't know if it was Stan that actually said it or one of his colleagues, said that Bermuda is emerging as the innovation nation. And I thought that was really kind of cool. And then I thought to myself, well, how's the BSX kind of factoring into this? And that's what we call the Bermuda Stock Exchange, the BSX. And we've been very involved in some innovation that's really been predicated on regulatory developments here, and that's just the indigenous reinsurance market. It was the convergence of the insurance market, the reinsurance market with the capital markets, and the creation of new assets that are actually really developing a new asset class called insurance-linked securities. So, that's really taken hold here in the country because of the innovative and regulatory framework that exists here. And when I was asked to speak on this panel, I was thinking a little bit about, how markets and how regulation help develop credibility for asset classes. I looked at what we were doing here and I thought, and incidentally, I have drunk the Kool-Aid, so I think that there's something here. So otherwise I wouldn't be sitting on this panel. But, I looked at what we can do as a regulated exchange platform, and I'm kind of excited because I think Bermuda can become the convergence capital because, with the platform, with the regulation that exists here, with a stock exchange that, is at the crossroads, is at the juncture of maybe a new business model or the traditional capital markets, that can help create that. So I don't think that you're going to find my comments that we're going to talk about today particularly surprising, given that I operate a regulated market. So I do believe that there's certain inherent important aspects of that to help create integrity and trust in a fundamental platform to attract more attention. So I just wanted to lead with that and then give Ted you an opportunity to talk, and then I can come back to what I think are some of the things that I've heard anecdotally amongst my peers that run stock exchanges overseas and out the space. Right.
Well, I think so. Your opening comment about the size of the market just for cryptocurrency alone is interesting. I mean, it is what 0.8% of a GDP right now, global GDP. So it took high yield bonds 20 years to reach that level. So it's you're right. It isn't gigantic, but it is pretty significant that it's done it in 2 years. Yes. What took 20 years to do before. So that's a big number. But the STOs and the other things that are coming online, the ability for everyone to invest in Uber before it becomes public. Those are where people are headed now. So the evolution for us that we see amongst all of our 130 customers around the world is the movement from the exchange in digital cryptocurrencies and that using that technology to now invest in other assets. Very similar model to the last 300 years of investing. So the only difference in this market is it's coming from the bottom up, not the top down. It's not the major sell-side bank issuers who are issuing the assets. It's the people that own the assets, and then people like private equity who typically do a SPV or some sort of limited partnership and get funds to invest in that, like hedge funds. But more and more of these customers of ours, even private equity firms, are digitizing their assets like real estate. We've done real estate, a $300 million fund, in a very traditional sense, using KYC and AML in our system, using the whitelisting and investing processes. But they want to put on a digital platform using Reg D and Reg S to let investors around the world come in en masse. So this is very much a fundamental model. It's just happening at a rapid rate. So I do think the ability for your platform, for example, to allow people to invest in things more widely is really where it's powerful. It's good for the economy.
Absolutely. If I could pick up on something you said, and this is kind of the anecdotal side, and I'm really glad that you made that kind of comment about kind of from the bottom up instead of the top down on the institutional side. And just to share with you, 2 weeks ago, Bermuda sits on the board of the World Federation of Exchanges, so we were at the General Assembly in Athens, and there was a panel that was discussing crypto and digital assets. And I was really surprised. And these are all regulated exchange operators. So these are folks that are really trying, and we're trying to figure out where the intersection point is in the old kind of exchange infrastructure provider paradigm is with this new and emerging world. And I was completely shocked by the divergence in thought process about the space. And forgive me, I'm going to throw like cryptocurrency and digital assets all together as one big asset kind of mix. And you had on the one hand really you have outliers. So you have like the Swiss stock exchange and you have the Australian stock exchange that are completely ahead of the curve. They're completely digitizing, they're custodizing, they're happy, they're moving down the realm. But then you have other large exchange operators, and I won't name them, but they're saying, look, there's way too much uncertainty around the space yet for us, and we don't know quite how to jump in, but what we're doing is we're gaining access to the space because we're taking strategic positions in companies that may have some enterprise-wide value down the road. So we're learning about that. Then you have other exchanges on the other side of the spectrum that are going, I don't know anything about it. I don't like it. It scares me. We're trying to just figure out how to make a contribution to the real economy in our countries. And then you have kind of the middle ground. You have like smaller niche exchanges that are going, we kind of get this. We get this, but we don't know how really it works yet. And I think we fit into that category. We're looking at this saying, we kind of get this, but we're trying to see how this kind of blends. And then you have others. This happened on a panel, and you guys will be shocked at this. A panelist said, well, you know what? This blockchain phenomenon, it's been around for years, and you know what? We're totally underwhelmed because there were big promises that were made, and nothing's really developed. And I just say this, and I don't say it to criticize any of the work anybody's doing in this space. What I'm trying to help you all understand that from a traditional capital market infrastructure provider perspective, that this is the thought process that's out there, and it's I think that thought process coupled with kind of the non-regulated kind of fencing around it is still pumping the brakes on institutional participation, so it drives things from the top down.
I think part of it is, you asked about blockers, so the first part of this is what's stopping us from going en masse. I think it's going pretty rapidly compared to a lot of technology adoption, so that's okay, but none of us like to wait. My background is OTC derivatives for 10 years and then trade surveillance for a couple of years after that, mainly in the technology space, but right on the front lines of the market, sitting with traders, risk managers, operations people in the back. So I have a lot of sensitivity to having to fit that mold. And I think one of the things is the language barrier. So the great promises were made 5 years ago by Hyperledger and everyone else saying, you're going to save $5 billion on plumbing, right? And then there was nothing about making money in digital assets, on how to digitize an asset and make money on it, and then run it through the back office in a normal way. And unfortunately, that's where we find the biggest blockers in these the older mentalities, is they thought you were going to come in with a $5 billion cost savings check. And instead we walk in and we say, how can you make $5 billion? And they say, I didn't know blockchain could do that. So that's the biggest challenge we honestly have with the bigger institutions. But to give people hope about what we're seeing, and I just want to talk about the customer use cases. So the movement from the bottom up is like this. So RBC, XP Securities in Brazil, largest broker-dealer in Brazil, the CME Group uses this for the gold project, right? All these things are examples of customers who are attacking the market slightly differently than just a pure exchange. What they're saying is use the technology to reach my limited customer base, my private banking and family office base, and serve them as investments, into access to investments. So I think the family office space is actually one of the biggest contributors to the growth in the market on the institutional side. So it's starting down there. So I would recommend sort of looking at it in that way, in private market sense, and then taking it in a wider view on public. Because if you can get accredited investors on the platform, your platform, I think you're going to get a lot of uptick.
Absolutely. And rest assured, the bigger exchanges are looking at the space, and they're looking at different applications, whether it's royalty, kind of mechanisms, or it's something else. It's just not, it's not enterprise-wide adoption until there's certain things that happen, I think, in the ecosystem around that. I think what's exciting for all of you that are in the industry, and kind of I'm looking at from the other side, is, and you do talk about the speed at which the changes are happening, but it is an ecosystem. The capital markets, the global capital markets, and the domestic capital markets is an ecosystem that has to kind of work all together. And I think what you guys are starting to experience is that ecosystem starting to understand a new thought process in terms of products and trading application. And sadly, when you have an entrenched ecosystem, it takes a while for that to take place. And when you have regulatory components around it, and don't minimize the importance of the competitive angle of this as well, because exchanges, we have tremendous amounts of capital and resources that have been invested in the infrastructure that underpin this. So anything that looks kind of that in a sense could be a disintermediary type of situation, you're going to see the competitive kind of juices start to flow from the traditional players. So
well, so speaking of the competition, especially with you running an exchange, what do you think about decentralized exchanges? Right, so this is applying blockchain principles and the technology directly to that exchange mechanism. So instead of talking about the new kinds of assets and the changes to the capital market, this is directly applying those principles to thinking about non-custodial exchanges. The most decentralized exchanges, they're basically like, it's almost like a Craigslist that says, this guy's posting this guy's posting that, okay, right? And then there's variations on that theme in terms of how decentralized the exchange is, where do the assets sit, who's holding custody, just that peer-to-peer nature of cryptocurrencies, right? In theory, you shouldn't need an intermediary such as an exchange, such as a traditional stock exchange, to mediate that trade. So how do you, especially from a competitive perspective, think about whether or not that technology will emerge? Yeah, well, we'll start with you first, because maybe because maybe you can be a little bit more agnostic to the market and build the different types, but for you sitting in the position as the CEO of a more traditional stock exchange, how do you think about these?
So thanks for that question, and you poked the bear on that one. That's okay though. That's okay. So I'm in a really interesting kind of situation. So I don't have that old legacy kind of machinery to protect. We in Bermuda, as I think that you've all seen, is we're very open to new thought processes and kind of applying what we know to new business models. So leaving from that point of departure, I think that there will be a challenge to traditional exchange models. And I won't talk about centralized versus decentralized, but one of the things, and this is probably the only controversial comment I'll make, sitting here, is, what I don't agree with marketplace applications or digital asset exchanges kind of walking around saying we're exchanges. I think that they are personally, I think they're applications and they're marketplaces, because from where we sit, an exchange conveys a very different thing. It conveys market infrastructure, it conveys a sense of regulation around the infrastructure. So that's the centralized component of it. And because of all those mechanisms that, whether they're regulatory or operational, that creates a certain level of integrity, in my view, for the platform, which gives comfort for users that, there's equal access, there's really solid price discovery, so you can determine, the value of your asset that you're trading, that there's inherent protections on the pre-trade side, on the trade side, on the post-trade side, so people, get fair value. They get the money if they're selling. They get the asset. And then there also is the very important security around the custodization of the asset. So there's all rules that that go into this. So from my perspective, until there's a regulatory framework that actually not only deals with the placement of the asset, that goes right through to the trading attributes and conduct of that, and then how you custodize that asset, and to my mind, it's still a marketplace. It's still a peer-to-peer fun thing to do. But I will posit to say, and Ted, I'd be delighted to hear your view on this and challenge me. I just think that once those things are in place, and I think folks are doing that. I think we're starting to see that. I think we're starting to see a shift toward the more traditional models, but with a modern kind of flair to it. So it's the writing's on the wall. We know how regulators are viewing ICOs. Security tokens. We know it. It's there, and we're doing it in Bermuda. The SEC has been very clear about it. And I think some of these platforms are also going to start to, feel the pressure of being a little bit more, kind of act more like a centralized market. So, I don't know, that's my kind of thought process on that.
I tend to agree with you. I think these markets are retail, accredited, and public. And so there is still these steps that we go through. And there are financial institutions who have their own marketplaces, and they can use an exchange technology to be a trading technology. So that's how as we sell software, it is agnostic to who's using it for what. I mean, we have to know, of course. But one of the things that has to happen, as you said, is there has to be some trust and faith in institutions, because they're putting their own public's money, their own investors' money at risk, and they need the sort of structure that you have to protect them from that, especially their jobs. I mean, if you're the CEO of a company who's going to bet the farm on investing in a product on your exchange, he wants to make sure there's some insurance there, all sorts of insurance.
Absolutely.
And so we are highly motivated by the fact that the regulators are stepping in. We wish they would move faster. I'm so glad that in Bermuda we already have two customers. I mean, Ultra's a great example of this. In fact, one of our people just bought some Ultra BMD on the exchange 5 minutes ago. And that's the speed at which markets can move now because of the technology. One of the things I think is important is this ecosystem you talked about. So what we've had to do as a company, we're now 135 people, so we have the horsepower to do it. I don't know how we would have done it 3 years ago. We have market maker partners, we have liquidity partners, we have lawyers and others who we turn our customers to make sure that they're doing their research right around how they structure their systems. So we've built that ecosystem, and I think the promise of liquidity is one of the biggest needs for these new security tokens coming online.
Yeah.
And so that's what we're trying to foster, is this liquidity.
Well, I mean, in our world, on our side of the fence, liquidity is the holy grail. It is. I mean, this is what and it's a bit ironic that I'm invited to be here because, we have a well-regulated, market infrastructure, and we struggle with liquidity in our domestic market. And those are things that are structural ecosystem issues that we have to continue to look at through the lens of, our domestic market. But the liquidity issue is going to separate those that are successful from those that aren't. And I think the other thing I'd like to just ask your opinion on is, and this is where centralized versus decentralized, I think, maybe come in. I mean, I've watched exchange application platforms in different types of asset classes fail simply because they've been created for a specific product for a specific user. And one of the reasons why traditional exchange structures work so well is that you can aggregate the maximum amount of those in the market to buy and sell based upon a centrally derived price. So I think independence is a very important thing here too, because I'd be interested in your view. I mean, it would be really difficult. I would say a challenge if you have one type of asset listed on a specific exchange just to deal with that asset, because it's going to be hard to get a lot of participants coming in. It's going to be, I call it limited liquidity.
Yeah. We actually are adding to sort of underpin what you're saying. We're adding coins to people's, or tokens and other assets to people's exchanges every month. So they call and they say, I want to do this, I want to list this, and we provide that capability to do that. So it's occurring now, and the uptick's been about 8 months. It's just started to explode. And that's really, for our existing customers, that's what they're doing. And then the movement I would like to see is into the STO market, into the idea that you take infrastructure, real estate, other trusts, and those sorts of products, and move them on into these markets, because then there's $54 trillion sitting out there that's highly illiquid. And you and I, all of us, want to invest in platinum and plutonium and other things that we can't right now, in real estate projects that are $1 billion, and infrastructure projects that the governments are putting out. And none of us can invest in that now, but we have capital in our hands to make an investment on which we hope to get a return. And right now we cannot. And so the promise is there for institutions like yours to be able to open those markets to people.
And we, at the exchange side, we've understood this challenge because, one of the things that we do talk about, it really is on the top of the list in the exchange world right now, outside of just kind of regulatory issues, is ESG companies and investing, and developing capital raise mechanisms that are efficient for small, medium enterprise companies. And one of the things that we have, I will say collectively, as the exchange space failed on, because we have so much regulatory overhang, and not in Bermuda, this is just, I'm talking in broad terms, whether it's United States, European Union, or wherever else, that it's really difficult and costly for small enterprises to get access to capital at a cost that makes sense for them at their developmental stage. And one of the promises, and I think, and I share this view with all of you, one of the promises that this space provides is that ability for entrepreneurs to get access to capital, because I think we all agree that, kind of capital market development, growth, economic growth happens at the entrepreneurial level up. It's not big companies. So one of the promises here is in one sense, a disintermediation of some of the friction costs in an IPO.
Yeah, that's right. Yeah.
But there's a cost to that, right? So when you start taking retail level investors money, there has to be some protection. This is where I really struggle from, looking at it through my traditional market, infrastructure regulator perspective to, well, let's just throw it open and let's have some fun, right? So, and I think that this is an evolution.
Well, the good thing is we have the Jobs Act and we have Reg A Plus and the ability to invest in private. That's the best thing for us, is the fact that that regulation exists. But it started with crowdfunding, but I think flipping that on its head the way you described, which is let the investor come in and invest in private companies, but with less friction. And that's how the platform was designed, was for really uploading cap tables and equity and managing ROFRs and the whole process and your listing letters. And so all of those things need to happen, because that market alone, I think in the US is $2.4 trillion. And boy, wouldn't I like to have gotten in on Uber early on.
Yeah.
I mean, what a wonderful thing. And I think,
But speaking to your point on Reg A+, no blockchain company that I know in the US has actually done a Reg A+. So I've known companies that were thinking, but they actually pulled their Reg A+ and made a Reg D because of certain issues around if you go above a threshold in number of shareholders, now you're a public reporting company. And the costs are still really high. So those tools, those regulatory frameworks are there, but they're not useful yet.
right, there is a cost to, of course, on regular, there's a limit. And so we have different customer bases. One, like in Europe, is saying it's an asset manager, and they have friends who are VCs and private equity firms who have invested in small and medium-sized companies. They can be a $100 million company, but they need capital, and they should, because they're growing. And then their other side of their customer base is the family offices and other sources of money. So now they're doing a private marketplace to allow this friction to be reduced so that they can now invest in a digital way. So that's a good example of capital beginning to move faster. It's the speed of money that makes economies grow, right? And so now how do we do it on a more public basis? You're absolutely right.
And I think that's, kind of circling back to the theme of what we're talking about, that's, I think, the divide between where we are today and where we will be with really deep levels of commitment of institutional money, where we start to see liquidity develop in a deep fashion and turnover with velocity on a market. I honestly do think that exchanges and some of the regulators are taking a very cautious approach, and trying to really survey the landscape and see where the bombs are they're going to blow up, and try to prevent that from happening. But from our side of the centralized marketplaces, it is clear that something's happening here. I mean, and we're just trying to figure out how to make that work within the confines of our infrastructure.
Perhaps we could talk to the regulators about making that 99 number a little bit bigger.
Yeah, well, that would definitely help. But a place like Bermuda, smaller and niche-focused exchanges can really help that. So from our perspective, we completely have a digital asset crypto strategy. We're looking at ways to do this in a very deliberate and cautious fashion, but will deliver value. Certainly, the applications that you talked about earlier, with the digitization of assets, that's probably more in our wheelhouse than if we were to go full-blown a cryptocurrency exchange, because our DNA right now is a typical cash exchange. So we trade equities and fixed income. So that's a massive leap of to go into a cryptocurrency. We're not a forex trading platform.
Right.
But
So again, back to a competitive question as an exchange, you have crypto exchanges are the biggest money makers in this space. So Binance is probably the fastest profitable unicorn in history, and Coinbase has a $9 billion valuation. You've got all these other exchanges, and they're making money whether the market is up or down because people need to move in and out of positions. And as those folks, they have their DNA in crypto exchanges, but they can easily, and they have the infrastructure to move into now STOs. So that directly then competes with you. And they're not decentralized exchanges; they are centralized custodial exchanges. So that's how they have speed of execution, and they're able to aggregate liquidity and price discovery in the same way that a traditional exchange was. So how do you think about competition from these new kids on the block that are fast growing and profitable, unicorns?
yeah. Well, from our perspective, I mean, because we're a smaller exchange, we'll move along the kind of the product life development cycle with something we know. But if the technology is such that, and if you can do something in conjunction with proven technology that actually starts to meet the needs, the regulatory and the framework, then I think it's a collaborative type of situation. So I wouldn't just say, and I hope I didn't imply that we'd simply just look at an STO and not crypto down the line. But I'd say just as we ease into this space, kind of in the thought, because we're a small exchange. We have tremendous regulatory recognitions that are predicated on a very measured approach. I mean, you would never see an exchange our size with full membership of the World Federation of Exchanges, and we sit on the board of it. That's a big deal. So we want to really protect that, because that is in itself the value proposition to anybody that we work with, right? That's from the U.S. perspective, that's the medallion. That's the coveted medallion, right? So anybody that we work with is going to have immediate access to that credibility. So, as our thought process is developing, I mean, I wish that I could say to you, it's this or that. I mean, we are definitely very much, developing our thought process in this space. And I think we'd like to see like a hybrid. We'd like to see where, we're providing those levels of comfort to the market based upon the infrastructure that we have that kind of speak to some of the inadequacies that are perceived that prevent or create a block for entry into the market.
Well, in we've had to sort of walk down this road, and it's been a big growth curve for a company that starts, because we're 6 years old, 5.5 years old. But we've had to deal with regulators in this region, in Asia, in Europe, in the US, in Canada, Brazil, and had to be on the phone with them and meet with them in person before they would allow our customers to buy our technology to run the exchanges. So it is a process, and we've had to address GDRP, we've had to address compliance, we have trade surveillance, we have AML, and all these things. All these pieces take a while to build, especially on a new type of technology like a digital exchange. So I think that from what I'm recognizing is we're sort of past that. We're just crossing over that chasm now, where we can talk to the biggest exchange, and we're sort of ticking off all the boxes. And hopefully, what that does is then takes over the next year and a half, 2 years. There's more comfort in at least the technology and the infrastructure of liquidity around it, or liquidity providers. So we're trying to create this big picture. It will, though, take time for someone to because you're moving into a new market if you move into
asset
crypto.
class,
It's
yeah,
FX,
absolutely.
you don't do
Absolutely.
FX. So that's a bigger decision. It's not just technology, it's
The markets.
operations.
Yeah, exactly.
But exchanges are moving there. Like I said early on in the conversation, Australia, the Swiss exchanges, and certainly the recent announcement by New York ICE, what they're doing with their consortium, that's big. When you have a consortium of that magnitude coming together to figure out, how to create a platform and promulgate that, that's, that something's going on behind the scenes, and everybody's trying to figure that out.
Vacuum.
Yeah,
With
back.
Microsoft.
And going to the way the market's evolving, a lot of the trading strategies in crypto has been quantitative and arbitrage strategies. And so that, again, implies a very different way of where the market is moving, technology-driven applications, data-driven, and so forth, technicals versus fundamental investing, and what that implies for the development of the market. How do you guys see that moving, and what are also some of the implications of the different kinds of trading strategies that might develop? So Caitlin Long, who's the former managing director at Morgan Stanley, has been very vocal. She's come out and said, look, the Wall Streetification of crypto is dangerous. We're going to end up in the same situation as the financial crisis. So we talked about STOs, so creating an asset-based security token is different than, and the derivative products that you could create off the back of that type of asset is certainly different than creating derivatives off a pure crypto asset or cryptocurrency that is not based on anything, right? It's not a debt-based instrument. And so the danger probably in that category might be a bit greater when you start creating these derivative products where you're basically creating synthetic inflation for an instrument that was designed to be deflationary. So how do you guys see some of the development in terms of the trading strategies and the complex products in this digital asset market, and what might be some of the potential dangers and things that we need to get right in this new market, learn from our past mistakes?
I will say less about this. I think it's just one of the things is obviously in risk management and hedging practices and all these things that you normally do inside of a financial institution need to be applied to these new asset classes. So that's just part of that operational compliance and applying everything you know before, because obviously people will take risk, and that's good for the markets, but you need to have the processes around hedging practices and other things to be able to hedge it out. So,
I mean, I think my response is it's not going to be a surprise to you in the sense that, so I won't comment on an individual strategy because I'm just not a strategist in that. But when I'll approach it from a regulatory kind of approach, and we have to look at systemic risk. We have to look at things that are actually going to rock the financial system. And I think that this is all kind of comes back to creating a marketplace that has built and developed trust and has integrity. Whatever that model looks like. And I think that that's going to be the foundation of the different types of strategies that'll take hold. But I think that regulators these days are very, very careful about looking at things that have wholesale systemic risk. After 2008, people are looking. I mean, just forcing all OTC products that cause systemic risk into clearinghouses. That was a very, very deliberate thing, and I don't think the regulators, whilst it's still all fun, I think when things there starts to be some risk building up in the system, you're going to see them get a little bit more aggressive with that.
Right, but Ted, do we understand the risk management of digital assets well enough?
Well,
right?
so the structure of an STO or a digital asset that is more like a security, that would seem a lot more understandable to me because I'm from capital markets. So it is what it is. It's a security that looks like all the other securities. We're just using better technology to make it liquid. On the cryptocurrency side, as you said, it is a different model, and I think we're still learning a bit. Although I have seen people, and the quantitative people coming out of France and other places who are very expert in these fields are coming up with strategies and technologies to address this. So I've never seen having been in technology growth companies my whole life, I haven't seen this level of innovation come out as quickly as it's coming out. So I bet we'll see a formulation around that in the next couple of years.
Good. And in terms of other regulatory developments or market developments that you guys think need to happen in the next, say, 6 to 12 months, like what do you think? Will we get closer to clarity on some of the outstanding issues in the market, or it's a bit of a chicken and egg problem in terms of you need the regulation to foster the market confidence, or sometimes but then you have the regulators saying, well, we need to see the market develop before we can approve. So that was the whole conundrum with the whole Bitcoin ETF approval, right, with the SEC and so forth. So are we getting, what's the feel in that, in that space?
From our, it's happening. there's a real discussion that's happening in terms of how you put more structure and regulatory, structure around this. But it's slow because there's still a lot of skepticism. But there's massive discussions at, the SEC level. We know that. We've seen that. I don't think it's going to go away. 6 months to 12 months, is that going to fundamentally change, I think, the regulatory thought process globally from I don't know if we'll get any kind of harmonization, and I still think it's going to be a bit, piecemeal, but it's the train's left the station on this, right? So it's evolutionary from where I sit, I think.
Yeah, and I'm actually surprised that places like Canada have allowed the kind of adoption they have. I mean, typically pretty conservative,
Yeah.
and we like the FCA and their principle-based approach. It's a lot easier than working with other large regulators who have different kind of approach. But
Incidentally, Bermuda is a principles-based.
and it's terrific, and it's obvious from the way the market's approached it.
Yeah.
So I think the train's off the station.
Yeah, it's
so
tough.
there's no question. And then you have the competition factor. Don't underweigh it, as Greg said. Boy, when you see the bottom coming up and eating you from the
Right.
shark coming up, people move.
I agree.